Good afternoon, friends. This week we close out the week between $10 and $15,000, depending on which of the systematic trades you were trading with us. And we were able to end the week quite positive, though not as maybe massive returns as normal. However, that is natural in markets when you have slower activity. There was a lot going on in anticipation for FOMC and how that would pan out, how that would impact markets, how hawkish or dovish Powell's response was. And of course, as we saw, it actually ended up being much more dovish than what the general audience had expected. Everyone was really looking for, we already knew that the rate cut was coming. The main question was how Powell was going to respond about changes in the labor market. And oddly, unlike what the consensus was, he came out feeling very strongly about the labor market, really focusing on the fact that yes, there's not as much firing, but there's also not as much hiring. There's kind of an equilibrium between how many new people are being added along with how many people are being asked to leave. So there's not as much of the churn of employment. But of course, really those who are being most significantly impacted are those that are trying to come into the labor force. But unemployment numbers continue to trend extremely low when looking at some of other periods of history where unemployment has spiked significantly. Now, people like on the ground aren't feeling that. People are finding it very difficult to find jobs. Those who have jobs are concerned when AI might start to push them out. So, there is still a lot of nervousness in the market, but overall, when you look at the fear and greed index, things are now back to neutral just because a lot of people were nervous that maybe there wouldn't be a rate cut, or maybe the rate cut would be pushed back to January. One of the things, though, I do really want to, tell you guys about is right now, the rest of the world is now moving back towards a rate hiking cycle. And the United States is really the only country that's still in a rate cutting cycle. And part of that was because we waited the longest to lean into rate cuts, to really make sure that inflation was coming down and the labor market continued to be strong. Powell got a lot of criticism for that during that period. However, now you can see that those who started cutting rates earlier are now facing really significant problems with very fast increasing inflation, along with massive jobs cuts. So the country that is probably most important when it comes to the rate hiking cycle is New Zealand. They tend to be the first country to go out ahead in rate hikes. They try not to wait too long before inflation data and jobs numbers become too out of control. So they tend to be the most conservative in the spectrum of rate hiking, and then followed by some of the other countries around them. So that's going to be something to pay attention to, because it may really change how we see the first 6 months of 2026 while Powell is still Fed chair. But of course, his time is also coming to an end, and Trump would like to find someone that is going to help them continue to cut rates because of the fact that the deficit is just so high and we can't really afford to pay back the interest on all of that debt. So those things are really important. They're still kind of out there. Next week, we have OPEX. Right now, it is the largest options expiration ever. So it means that we are trading the largest number of contracts on this options expiration, December 19th. So that is also something that you do want to be paying attention to or paying attention for, because we can get some massive squeezes. We not only have we not only have OPEX, but we also have VIX expiration, which is before. So usually in the early part of the week going into VIX expiration, you'll have one really strong trend. And then in the back half of the week, you end up with an opposing trend that takes back most of the move. So if we start the week quite bearish, then we can expect to end the week likely on a very bullish note, which then takes us into the end of December. If we start the week with a very bullish tone, then we may see some correction into the end of next week. So that might help you guys make decisions about when you want to take profits or manage trades overall. So one of the key things we trade is really we trade our systematics and our discretionary trades. And a key thing inside our systematics, we do try to have a set of trades that is uncorrelated to the others so that when you're getting a really strong like trending market, you already know that you have trades that are really going to take advantage of that trend and give you that really strong asymmetrical risk reward. And then we have other trades that basically take the opposite side. So a more neutral to opposing directional position. So if we're seeing really strong bullish trends, then our non-correlating trades need to be much more neutral to slightly bearish. Whereas if the market is very bearish, then our other trades need to be neutral to bullish. So having this non-correlation and having this asymmetrical risk reward means that no matter what the market is doing, we will end the week positive. And so this week we did end the week positive. We ended between $10,000 and $15,000, depending on how you set up your trades and which of our trades you took. And if you were in any of the discretionary trades. So, the key thing is that our morning trades, those did very, very well. So we kind of divide our trades into different parts of the day. So our early trades, those did well. And then the afternoon trades, those did well, but they were inconsistent during the week. Just because we were towards the end of the day, often getting really big like end of day moves that are more difficult for those end of day trades. So the end of day trades, they performed fine. They just didn't perform magnificently, but our morning trades did very, very well. And so between the balance, we still ended the week quite green. And I don't think anybody was necessarily complaining about their returns. You can see our SPX trades here. You get kind of an overall balance. So here you end up with 700 ahead. And then if you come down, you really end the day. Oh, this is diagonal. So no, that's not the systematic. Here will come down. So here you can see again, you end up with a multiple balance of trades here. So you end up ending the day a couple thousand up. And then you can, and then you can continue to see that on each day that there are a couple of trades that do very well and then a couple of trades that are modestly red. And so between the range of trades, you end the day green. So some of the key trades that I would really like for us to look at is, so we had a number of trades on BMNR and those finally got green. And then we needed to then adjust them just because BMNR is struggling with everything that is going on currently in crypto. This trade was actually quite red, but we did have so much time and Gamma hadn't changed yet on the underlying that we did stick with the trades. And thankfully we did because they did come right towards the end of this week, or really the middle of this week. These came back positive and we were able to manage them in profit. VRT, we have about 8 different trades on VRT. And then we did decide on this double top pullback to try and kind of minimize some of our exposure. So here you can see this was actually expiring on December 12th, so we needed to close it. It was a very low risk trade. It actually only cost us $17 to get in. You can see that the potential profit is massive. So it's like a 1 to, I don't know, 25 risk reward. It is a diagonal trade. So it is unique to a calendar trade, which would have the strikes on both the long and the short strikes on the same strike. And here you see that they're disjointed, and that's what allows the trade to become so inexpensive. And here you can see that we were able to return $80 per contract, but that is a 471% return. So it's a massive return for your investment. And of course, if you scaled, you would have made a very nice return. And part of why we added this was just to get a little bit of an extra boost because of the fact that we were at all-time highs and we were expecting to potentially get some kind of double top or pullback. And so because we had, about 7 or 8 other positions, this was really helping us kind of hedge to make sure that if we got any kind of drawdown, or not drawdown, but we were losing some of our returns on that double top, this would kind of help pump those up so that overall we weren't getting, we weren't losing profits that we had already baked into the system. So then we've had this trade on for a really long time, this Pan W trade, and it is starting to get towards its end. Our long is expiring in January, and our short was expiring on Friday, and okay, there's my mouse. Our short strike was expiring December 12th. We could have kept rolling that out, but in reality, we were already up massively. This trade was already up 263%. And that's on the current version of the trade. We actually had already been banking in profits as we were rolling out that short call, because as you can see, we started this position back in November. Actually, we started this position earlier than November and have just continued to roll out that short strike over the year. The fact that Pan W very often has very wicked moves on its earnings, even though this entire position was actually deeper in the money, we did keep it on because of the fact that Pan W does have a history of, even on really good earnings, getting a massive gap down. And so we kind of expected that, yes, our long position would continue to get deeper in the money, but that the price of Pan W would struggle to really stay well above that 200 strike, that it would really digest here or give us a pullback. And so we just decided to close this up since we are coming so close to the expiration point. Then let's see. So Uber was also a funny one. This is a trade we had on, and we actually had to manage this trade. Our calendar was out at 110. And as you saw, Uber was not really performing the way that, we were expecting. We did expect it to take a long basing and then pop up. We just didn't expect it to take such a long base. So we did move that down to the 100 and still couldn't get enough of a pop. So it was very low risk. I mean, literally cost us $4 to get in. But of course, you would have gotten a really nice return had it given us the pop that we were expecting. So yeah, I just kind of said it was a bit of a hilarious trade. Didn't do much for us. But the good thing is that, when you're not losing money, you're protecting your profits, and it is allowing you to then take other high conviction trades. The other good thing is that, this week currently, I mean, just overall, it has been a struggle because we haven't had really strong direction. Specific underlyings have had really strong moves. Like in the financial sector, we had, there have been really, really strong moves. But overall, We've just not had that like overall kind of push and then carry on to the upside. A lot of double tops, a lot of consolidation, a lot of bouncing in top and bottom of the ranges. So, when you're trying to swing trade, it does make it a little bit more difficult to get those like full on moves clearly to your pinpoints. But the good thing is that we're not losing money in these trades. So, though they may not be performing as perfectly as we would have wanted, they're performing enough that we can continue to trade week over week, which is the most important thing. Um, ASML, this has been a great setup for us. ASML has just continued to have really clear pinpoints on specific expiration dates. And I did signal to the group that even though we have until December 19th, that if they wanted, they could close this trade because we were already up 120% and we were really digesting on this pin. This trade has continued to perform for those who decided to stay in the trade, but we did close the trade officially in the callouts just to be able to take some profits off the table. Then our other trade that just performed extremely well is APLD. Those of you who have been watching our weekly roundups week over week, you know that we just continue to play APLD. That has just been a really clean chart to trade against and has allowed us to consistently make money month over month. One of the main things now is we're trying to really help our members really focus not only on flipping returns with options, but really trying to recycle some of those returns back into shares, especially companies like APLD, which are very early on in the process of kind of booming as as this AI revolution kind of expands and increases. And companies like APLD or Rigetti that have a really clear niche and have really strong contracts are really dominating their space. That they try and get that kind of share exposure because right now APLD is in the 30s, but you know over the year when we first started talking about it, APLD was below 10. So it just shows that already you would have had like a 200% return on any shares you would have bought, at the beginning of the year. But one of the trade setups that we really like to play are our short straddles. They bring in a massive amount of credit, so $1,000 of credit. And on a stock that is only $30, if you were to max out the credit received, that would get you about 30 shares. So it wouldn't buy you 100 shares, but it would get you 30 shares of the underlying, which I think is a very decent exchange for a position you're only in for 1 month. And you could have just done long calls, but you would not have made the same amount of money on those long call positions unless you would have scaled up massively. This is the returns for only one contract. So for some of our members who have been buying APLD since it was in that 10, 15, 17, 20, 25, have been dollar cost averaging on the way up, they may have done 3 or 4 of these positions, and 3 or 4 of these positions would have allowed you to scale in for free to more than 100 additional shares of APLD without having to add any new cash to the mix. So you would be dollar cost averaging with returns from your short positions without having to deploy new cash. So this was great. The members that took this trade, in fact, were up well over $850 because the $850 is the return that you get on the covered straddle. But you also have to think that from the last time we added shares, the price of APLD was up $2. So you would have made an additional $2 on the shares that you purchased. And of course, for those that purchased shares well below this price are continuing to make money on the way up. So this is a strategy that I really love and yeah, continue to recommend. But it is a strategy where you do need to own the underlying shares. Some brokers will allow you to enter this strategy without owning 100 shares, but you do need to own enough shares to cover the margin. You can talk to your broker about that if it's a strategy that you are interested in. For those that don't have the level 4 on TOS, if you own the underlying shares, then you actually only need to have level 2 in a margin account to be able to take this trade. All right, friends. Those who are new to the Trade Speakeasy and you've just joined during Black Friday, some of these trades will be new to you because they weren't called out during the last 2 weeks. These are the discretionary trades, are trades that we have been in for some time. As you can see, many of them we entered in November. But that is the reality of swing trading and the ability to be able to stay in the trades for multiple weeks or even months in order to really be able to allow those returns to compound. All right, friends, I hope you have a great weekend. And if you are interested, I would say join the Discord, check out our website. But also, if you like these kinds of videos, please consider giving us a like, giving us a share, and then giving us a comment on what trade you thought was the most interesting or you would be the most interested in learning more about. All right. Bye for now, friends.